Good evening. Tonight we're going to discuss Align Technologies and see if it's a good idea to invest in this company or not. Align Technologies is a medical device company that was founded in 1999. You may have heard of it because it is the company that has introduced us to Invisalign, which is a clear plastic oral aligning tool used instead of metal braces. It is also the creator of iTero intraoral scanners. This company is doing quite well. It has currently 4 million Invisalign customers in over 90 countries, and 3,000 dental labs are using the iTero scanners. It's been a good year for Align Technologies overall. In February 2017, it had an acquisition of a Brazil distributor. In March, it boasted 1 million iTero scans, as well as 1 million Invisalign teen patients. In June 2017, treatment planning facility in China was introduced and has started to operate, thus expanding Align Technologies' capabilities in other countries, especially the Chinese market. It was also announced in September of this year that there was a non-exclusive distribution agreement signed with the Patterson Dental Group. This gives Align Technologies the capability to be put onto the dental plans for Patterson Dental, and also gives it more capacity to be able to reach more and more customers. As you can see from this chart, Align has been soaring for the last year when it comes to stock price index. And then also in the last 3 years, it has increased significantly. In 2015, it was an 18% increase from the 2014. In 2016, it was a 46% stock increase from the previous year. And just from the beginning of this year to September 14th is when this analysis was stopped, there was a 91% increase in stock prices. As you can see from this graph, there's 10 years of stock trends shows that Align Technologies has had a considerable increase in not only trading volume, but as well as stock prices, starting around anywhere from $20 per share up to $186 per share currently. They have a target goal of about $196 per share by the end of this year. In the last 2 months of trading, we've also noticed that there's been some increase in trading. I've created a graph here that shows the Bollinger Bands, the lower Bollinger Band being green, the average, which is a 20-day rolling mean, is in orange. The red band is the upper Bollinger Band, with the blue line indicating the actual price, stock price index per day. As you can see, not only has it's been constantly increasing, but especially in the last couple of days, the stock prices has been constantly hitting and or above the actual higher Bollinger Band. Their stock has remained around $150 for most of July, and you can see that there's a support and resistance band that kind of kept it along that price range. You start to also notice that there's a couple whale tails that have arrived at the end of July and in the middle of August. These whale tails are indicative of investment companies wanting to seriously make some good revenue and put in a pretty big bid and bought quite a bit of stock and immediately sold it. As you can see, around July 27th, there was a massive volume change that increased the stock price significantly, and then you see it taper off almost immediately after. Another smaller but still noticeable effect was around August 17th, And later on, a little bit on August 18th, which another whale tail, where the investment houses actually bought stock and immediately sold it off to increase their revenues. And you can see that the price of stock immediately fell after that. It regained quickly after that, but not from investment houses. I did notice that there was a correlation between the P&E ratios and sales. If you can notice here that the increase in sales has a direct correlation with the PE ratio. As sales increase, earnings per share increases, which is the amount of money that the company puts back into the stocks, and therefore the price to earning ratio also increases, which has a direct correlation with stock price. The higher the PE ratio, the more investors are willing to spend on that particular stock. So we can see here in the last month, to we can see that not only has the stock been constantly increasing, but it's also been hitting the upper Bollinger Band, which by normal standards, if it hits the Bollinger Band, the upper level, one should sell. But in this case, considering it's been hitting it consistently, and it would be probably recommended not only to, if you own stock, but to hold it and or buy more until that price starts to actually fall below that band. And in conclusion, Align Technologies is a very good company that is moving up in the world and seems to be expanding not only their operations, their technologies, and their innovating methods, but also the stock market is directly showing how well it is doing. So to recap, at this point, if you currently own Align Technology stock, I suggest that you hold it or buy more. The stock should be continuously increasing, at least for the foreseeable future. I would not sell it until the price actually goes below the upper Bollinger Band and starts to trend down towards the lower level. Now, if it actually, in the future, if you notice the stock price maintaining around the average of the Bollingers, then in honesty, you should definitely hold it. If it actually gets close towards the green band, definitely buy more. But don't sell currently until the the stock price actually dips below the upper level. If you do not own stock, I suggest go ahead and buying some. As you can tell from just this year, from the beginning of this year to September, the stock has almost completely doubled with a 91% increase. Be mindful of the Bollinger Bands and follow the recommended guidelines. Thank you.